Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a viewer request company. So if you want to learn about different types of dividend companies, great companies that probably don't get the spotlight or the airplay in other channels, you definitely want to subscribe, hit that notification bell so you don't miss out on some of the videos that I put out. With that said, we're going to take a look at this company. So this company that a viewer requested is called Reassurance Group of America. The ticker symbol is RGA. For those of you that are not aware of this company, it is a company that offers individual and group life and health insurance. So they do a lot of living benefits, health. They do group life and insurance companies. So if you look at their website, they have different areas where they operate. Now, if we go a little bit more to some of the presentation, I wanted to see some of data. So capital and liquidity, strong balance sheet with a stable capital mix over time. So you can see leverage ratio and all these other stuff. Yeah. Now, if we go to page 15, you can see long-term business and long-term success. So you can see some of the CAGR, the data in there. So investment strategy, balance risk and returns to weather cycles. So effective and balanced capital management approach, consistent book value growth over time in a range of environments. So let's take a look at Simply Safe Dividend. Based on their safety score, they rated as 99, which is very safe. This company has a dividend yield of 2.57. Market cap is about 8 billion, which is considered a mid cap. At the time of this video, it is at 124. Now, looking down to some of the dividend key metrics, you can see payout ratio is about 64. During the recession, they have maintained their dividend during the 07-09. Now, if we look down to the dividend growth, you can see the last 5 years, 13%. The last 20 years, which is 13%. So you can see based on a chart, they're going on an upward trend, which is really good to see. Dividend growth streak of 12 years, consecutive increases, uninterrupted dividend streak of 27 years without a reduction. Now, your payment details of this dividend is based on quarterly in the months of March, May, August, and November. Annual payout will be about $3.20 per share. Which breaks down to about, as you can see here, about 80 cents on August. Ex-dividend day would be August 15, which is 5 days away. Now, looking down to some more data based on Simply Safe Dividend, it might be undervalued. You can see the sector PE ratio is about 8, financial is about 9. Looking down a little bit more to some of the total sales, you can see right here. Outstanding shares outstanding, you can see right here. Return on investment capital, you can see last 12 months is at 3%. Return on equities is 3%. So I would like to see a little bit more higher, as you can see, but that's what it's showing right now. Now let's take a look at tip ranks. At the time of this video, they rated as moderate buy. Based on 10 ratings, you have about 4 buys, 5 holds, and 1 sell. The price target is about 131 with a 5% upside. Their 12-month forecast rated in the high of 150, average of 131, and then you got your low of 110. Now, looking down at some of the analysis positions, you got a mixture of like a hold, a buy, and a hold, and some sells in there. So based on there, then you got your like bullish individuals with 16% upside, and then you got some of your 3% downside. Looking at the stock analysis, you can see smart score, neutral, And then you got some of your forecast modern buy. Then you got your hedge fund holdings have decreased, inside transactions sold shares, retail investors are positive. Now if we go to Yahoo Finance, looking a little bit more, you can see bullish patterns detected. Performance outlook is bullish. You got your 52-week range, and the 94 is the low, and then you got 127, which is the high. Now looking down to the earnings, you can see 2 beats and 2 misses, and then your financials, you can see it in based on the financial. Just looking at the chart, you can see it's been pretty improved. It's getting better actually. Revenue for 2021 is 16 billion, and you got your earnings in 2020 is 14 billion, and then 2019 is 14 billion, and then you got your 2018, which is 12 billion. Now if we look down to the trend, you can see a mixture of like holds and buy and strong buy. The rating is between a buy and a hold, and then your price target currently is below the average of 134. Now if we go a little bit more to the Yahoo Finance top institutional holdings of this company, you got like Vanguard, BlackRock, you got State Street Corporation. Now if we go to the chart on Yahoo Finance, the blue is the S&P 500, and then the red is the RGA. Looking at the 5-year one, you can see S&P 500 performs way better, but the year to date, you can see is better, and then you got your 1 year. Yeah, so now if we go to Webull, based on their analysis, there's 12 of them. They're rated as a hold. You got your strong buy of 8%, buy of 41%, you got your sell of 8%. Now looking at the price target, a high of 152, a low of mid average of 134, and then you got low of 110. Now looking at the institutional holdings, you can see an increase 125, new of 41, decrease of 139, and you got sold out of 37. Now if we swing to Nasdaq, they're also rated as a buy, and these are the firms that made that recommendation. You got like Barclays, Citigroup, JP Morgan. So now swinging also to bar chart, looking at the chart on the 1 year, you can see not as clean as I would like. I would like to see a little bit more going up. You can see a little bit more pattern going up in there. Now if we look at the volume, there was a bunch of buys over here a while back, but then after that it's just been a steady volume in there. The MACD has looked like it might cross over here, so we'll see a upward trend in here. And then you got your Rizzo in here, which is an overbuy. So now if we go further, based on bar charts targets, you got a 150 high, mean target of 127, and a low of 100. Their analysis rating based on 3 months has been, if you look at it, steady modern buy. Now looking at the current one, based on 7 analysis, it's like a mixture. You got 1 strong buy, 3 strong buy, 1 moderate buy, and 2 holds. Yeah. Now we swing by to simply Wall Street, based on the company overviews, trading below 59%, which is the fair value. So if you click on that one, you can see based on their estimate using their discounted cash flow model, their fair value rate this as 307, currently is at 124. So basically they rated it as 59% undervalued. All right, guys. With that, thank you so much for watching, man. Hope you liked this video. If you haven't done so, like and subscribe, hit that notification bell. If you have other companies that you want me to look at, feel free to write it in the comments. As always, please remember that this is not financial advice. I'm not a financial advisor. With that said, thank you so much for watching, guys. Hope you liked this video. Please stay cool. Please be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.